Thank you. So you were a CEO at Alibaba from 2006 to 2011 for some 5 years altogether. Why did you leave this huge, giant e-commerce company in the first place?
Especially the one you built yourself.
Well, before joining Alibaba, I've been CEO for a British retailer for 5 years. And I took Alibaba.com CEO for another 5 years. So 10 years is a really, really long time to be a CEO. And even the US president can only last for 8 years. I think for 2 terms, 8 years is good enough. And being CEO for 10 years, that's really long. And 2011, I was 40 years old. And I was the 3rd oldest employee of Alibaba Group. And I truly believe, the next generation, the younger generation of leaders can take Alibaba to the next step. And also, for family reason, I've been away from my family for 5 years, since Alibaba is based in Hangzhou, and my family were still in Shanghai at the time. I think it's also time for me to get my family reunited and get a reunion day to day, rather than seeing them every week or 2. So all these reasons together, thinking, what's next? So 2011, at the age of 40, kind of middle-age crisis, thinking I should
at
do
40?
something different.
I just wanted to say it's like a Neil Armstrong going to the moon. After you've been to the moon, it's sort of, you sort of get into a crisis. What's the next exciting thing? But David, you have actually really hit the market at the perfect moment after stepping into the PE industry. China has had just a decade of this whole booming phenomenon, where I think you have produced hundreds of globally successful tech companies. And what are the most exciting moments in your life over that PE decade?
I'm not sure whether it's from Shakespeare. Once he said in one of his piece of work, he's saying, you have been the king, now you can make other people to be the kings. So that's what my dream. So I've been very lucky to be part of Alibaba's amazing growth, become a world-class company. Can I leverage experience as well as the mistakes I have made to help other entrepreneurs to be more successful, or to achieve their success faster? So I think being an investor and put my own money and put capital behind our idea can make this happen. So I think the most exciting thing is always my next investment. Otherwise, I will be so complacent thinking, oh, I've done enough. So I always say my best investment, but my best deal will be my next deal, my next investment.
That's a wonderful
Of course,
line.
we have so many exciting moments in the last 8 years since I've been running Visionary Capital.
So tell us your next investment in that case, David. Give us a little bit of a hint.
Who are you eyeing?
The next one will be announced very soon. It's an artificial intelligence-driven customer service robots. So the company has been there for a while. In reality, when you shop with Taobao, shop on Taobao.com, and you're thinking to communicate with a real customer service lady, actually it's a AI-driven robots. So we're about to invest in this company. Hopefully this will be my next investment.
We're going to do a lot of research now, David, and please break the news with us here on Hey China.
So David, we also hear, particularly post the coronavirus, now the global economic circle is extremely concerned, and we are talking about 2020 is we have certainly surpassed the economic calamity that we have experienced in 2008, and so perhaps we are looking at the benchmark from 1929 to 1933, the Great Depression era. Yesterday, we heard from the G20 summit that there is a strong level of global willingness to, $3 trillion that central banks globally and governments have been pumped into the system to save it. But nonetheless, that says a lot about the impacts to the PE industry. We heard also SoftBank is currently in liquidity stress. And so from China, how do you see the liquidity sufficiency within the PE industry? Do you still see a lot of interest coming in? How is the capital market coming into the PE fund industry at the moment?
Well, if we look into the capital markets globally, have gone through a very volatile period, and the overall valuation has been declining quite significantly. However, when we look at the China's domestic capital market, has not been impacted that much. On one hand, is that market is quite separated with the rest of the world capital markets. On the other hand, the control of coronavirus in China has been quite successful, and we have been very hopeful it will be ended. Fortunately, it will be ended first. We'll start in China first, but it will be ended in China first. So with this confidence, and of course, with a lot of new policies from the government as well, similar stimulus plan, relaxation in some fiscal budget, all these things are, or tax cuts, all these things are also happening in China, already happened. So that's why on one hand, the capital market in China is almost intact compared to the performance before coronavirus outbreak. So on that hand, the venture capitalists and private equity firms in China are luckier than our counterparts outside China, because not all our exits are relying on international capital markets. So we still can have our company listed or exit from a domestic capital market, which has not been impacted too much. Of course, on the other hand, then you have, even in some of my portfolio company are listed overseas, then of course, the valuation has been going down together with the overall capital markets performance. The good news is private equity firm and venture capital firm, normally each fund will last 8 to 10 years. So hopefully if these kind of things stopped within a year or so, from the overall period of our fund lifetime, it's still tolerable. On the other hand, if you need to raise new funds outside China, of course difficult. Even nobody can do any roadshow at the moment. Two of my portfolio's IPO process has been delayed, not because of their performance, it's because you cannot see investors. Zoom is great, but you cannot write very big check without seeing a real person.
What about digital roadshows, David? Is this an option as well, or do you still prefer to meet, investors face to face? It's
an option, but it's really worries investor that you write a $10 million check without seeing the real person. If it's 10,000, it's okay. I think the trust online, virtual meeting, digital meeting, small ticket size for shopping or for investment is fine. But if it comes to a critical amount, it still needs physical meeting. The personal touch is still necessary. But also on the other hand, it's lower the entry valuation for some of the new investment. So the first quarter of 2020 for Visionary Capital has been the busiest quarter ever, first quarter ever in our 9-year history. And the deal number we have completed is our historical high. And total investment, the checks we write, is the biggest ever in the last 9 years. Congratulations. Can you put any amount on that? Can you give us a little bit of the size? We have already invested in 6 deals over $100 million.
Is that because, David, because of the valuation at a particular point?
There are a number of reasons. Number one, there have been some very good companies in China that have very strong cash flow. They were not even planned to do fundraising. So the coronavirus outbreak, the disruption in their business, in their cash flow, make these founders want to increase some cash reserve just for safety reasons. that accounts about 1/3 of our investments. In other, which means these are not investment opportunity at all to us, because founders, they don't need money. These entrepreneurs, very strong cash flow. So 1/3 are coming from this type of investment, new investment opportunity, which did
now,
not.
in the past, David, Visionite Capital has been focusing on sectors that are attractive to the millennials, like cars, home furnishings, real estate, but these are still kind of traditional sectors, right? So for the young people, you've mentioned an AI investment. Where do you see opportunities, in which industries specifically?
May I cover these sector focus later? Let me finish the new investment, why we make so many in very short, relatively short period of time. So number one is new investments which did not exist because of this coronavirus, disruption in their cash flow. They want to increase their cash reserve, number one. Secondly, there are fundraising companies, they are lower their valuation because the capital market valuation has been low as well. So which means their valuation getting more attractive to us. So that's number two. Number three, these companies are fundraising and they need more cash than before and more urgently. So we need to speed up our investment process. So all these three reasons, as a result, we made more investments, more deals, and more amounts in the first quarter of 2020. Then we talk about our sector focus. We spend a lot of time in TMT, we call it consumer internet, until 2016. And after 2016, we stopped investments in TMT, or we call it consumer internet. The reason is the traffic growth in China is getting flat. And the four giants in China's internet world, Alibaba, Tencent, Baidu, and ByteDance, these four companies, has taken more than 75% traffic share. So which did not leave too much room for startups. If the traffic is not growing, and the majority of the traffic has been taken by the four giants. So we then refocus on enterprise software and service, including with artificial intelligence empowered. We also look at new emerging consumer brands, which attracting younger generation, the millennial population in China. We further increase a new sector, which is education and training. So now we look into three areas: enterprise software and service, millennium population driven consumer brand, and education and training. So these are the three sectors to us.
David, from what you have explained earlier, so basically the capital inflow into the PE industry is essentially intact, but on the exit side, the valuation nonetheless is affected and will be affected. As you mentioned earlier, China has sent its best companies to the international markets. This is the only country in the world where all the best Chinese companies are essentially overseas domiciled, basically. And so going from Alibaba to Tencent, et cetera, et cetera. And so do you continue to see that trend that Chinese companies will continue to look for overseas listings into the future?
In the past, the listing rules in China did not support high-tech companies to be listed in the domestic capital market. For example, there are 3-year consecutive profitability track record, and some tech company, when they go IPO, is still loss-making. But since last June, the technology board, the STAR, listed is a new China's Nasdaq, launched in Shanghai, which has already waived these listing profitability requirements and other requirements, which enable more and more Chinese companies, tech companies, to be listed in China. And also we have seen more and more overseas listed companies thinking have a dual listing in China as well because of the new rules. So I think the capital market size in China is big enough to support a big company like Alibaba or Tencent. In the past, another problem is the overall size of the capital market is not big enough. So there are two reasons. Actually, there are three reasons why Chinese company go overseas listing rather than domestic listing. First, the original listing rules didn't support that. Number two, a relatively small capital markets didn't support a very big companies listing. Number three, there are still some industry restrictions for domestic listing. And the third reason will still be there. And I think only for these companies will choose listing overseas. For example, one of our company is a property technology company. It's a SaaS company, a property tech company called Fangduoduo. It's handling.
Oh yes.
However, the industry restriction in China is there's no property related company, even your property technology company, can be listed in China, because Chinese government want to cool down the capital market, do not want to see any new fund into the capital markets. So that's why the Fangduoduo can only be listed in NASDAQ. So this kind of industry restriction will probably be the last reason for Chinese company to choose to list overseas.
Now, in December as well, the government has released a new law which basically tries to have IPOs and listings in China on the Shenzhen and Shanghai bourses to prevent them from going public outside of China. At the same time, in January, we had the new foreign investment law as well. Do you think that such new policies and measures are sufficient and enough to attract foreign companies as well, especially tech plays, to list in China or do a double listing, as you mentioned?
I don't think these things will happen very soon. And because the Chinese government, we still have quite, it's half-opened capital markets. And also there are foreign exchange control in China. So the overseas companies listing in China will have to overcome these obstacles first. Otherwise, these things will not happen. On the other hand, the Chinese investors, domestic investors, are not very familiar with some relatively new names outside China. Of course, they know Google, of course, they know Apple, but other than these, there are a lot of internationally well-known companies, tech companies are not very popular in China. So I don't think that will happen very soon.
So David, is it fair to say that going into the future, Chinese tech companies will be more and more financed by Chinese onshore private equity capital and looking for more and more opportunities for domestic listing?
Again, not really. For some technology deals, the Chinese private equity firms are still catching up with their American peers, because the knowledge and the in-depth knowledge about this tech are still relatively new. And also on the other hand, US dollar denominated fund normally has a longer period, lifetime. So for example, our US dollar fund is 10 plus 2 years. So it can be as long as 12 years. And our RMB fund, local currency fund, is only 6 plus 2 years. So 8 years maximum. There are 4-year difference. So which enable the US dollar denominated fund to invest in a much longer view, in the longer term, even early stage. So normally a new technology needs a longer time to be commercialized. So US dollars still have some benefit. And on the other hand, from last year, from the beginning of last year, Chinese government is still, again, to encourage foreign investment, because China has forex reserve pressure. It was a forex plus issue. Now it's the other problem. So from local government point of view, attracting foreign capital has become their KPIs again. So for these reasons, I don't think the US dollar denominated fund will disappear in China. But of course, they are playing a less important role than, say, 5 years ago.
ByteDance, David, of course, is the world's biggest unicorn, right? It's valued at some 78 billion US dollars. Do you see more unicorns coming from China, like the one that you've worked at as well, Alibaba? Or do you see more smaller tech startups that are growing? And as an investor, would you prefer to invest in a unicorn or in a startup at the moment?
Well, there will be more Chinese unicorns getting more and more international, and some we invest to Chinese company, but our business completely outside China. So the business model and even some business models innovation from China now can be exported to the rest of the world, rather than one-way traffic importing US business model into China, importing US technology into China. So now it's not a complete two-way traffic, but we have seen some trends exporting Chinese business model, exporting Chinese technology to the rest of the world. TikTok is a good example. And we have seen more and more expats using WeChat, and also Ant Financial, Alibaba's sister company, Ant Financial. There are a lot of Alipay is everywhere. So it's correct. Of course, it's correct. And as an investor, of course, I want to invest. Every one of my investment can be the next Alibaba.com. Very happy if it's 1/10 of Alibaba size. I'll be very happy as well. So yeah, we made investments, but so far none of our portfolio can be as big as Alibaba, but they have some.
Do you
big
think that? Sorry for interrupting. Do you think that ByteDance could be the next Alibaba? I mean, we see such rapid growth in employees, in expansion internationally. Do you think it really has the structure and the leadership and the cash flow as well to be the next Alibaba?
Well, I think I still have very strong loyalty to Alibaba. I hope Alibaba can keep its leading momentum. But obviously it's a threat. TikTok, ByteDance is a threat to not just Alibaba, is a threat to Tencent. But I think we love this kind of threat. Otherwise, there will be enough innovation design for Alibaba and Tencent.
Healthy competition.
Without an emerging enemy. So it's good. So, it's good for consumer. It's a very healthy competition. However, I don't think TikTok, ByteDance will soon beat Alibaba. The reason is it's a social media, it's a media company, and Alibaba is an e-commerce. They are in two very different territory. Alibaba is very difficult to get into social media and failed a couple of times. Same, Tencent failed a number of times when they try to get into e-commerce. It's very different games. So I think Alibaba will continue to be dominant and keep its leadership, keep its leading position in the e-commerce, payment, and financial as well. And I think the pressure to Tencent from ByteDance is bigger than Alibaba because they were in the similar area. And the first internet giants in China has been overtaken by ByteDance is Baidu actually. So they were in a more similar business. So ByteDance now is bigger than Baidu in terms of market cap, revenue, profit, everything. But they still need to have a fight with WeChat first. And Tencent has not given up yet. And Alibaba is in a relatively safe and comfortable territory without immediate enemy or at the moment.
We have just launched the post-coronavirus, the new infrastructure development plan by the NDRC. And so I think it's somewhere in the areas of truly over $1 trillion RMB size. And so how realistic is this new infrastructure plan? It's generated so much talk, and I even equate it to Franklin D. Roosevelt New Deal back in the 1930s. If the economy goes into a recession, if there is a demand shortage, we push for infrastructure development. But this new infrastructure deal to invest in 5Gs and big data centers and so forth, you are right in the center of this whole industry. Tell us, where do you see this new deal going?
China did not need to build more airports, railway, high-speed train, motorway. It's almost done. However, if the infrastructure, the New Deal, is still in this, we call it physical infrastructure, like as I said, airports, railway, it will be a waste, duplicated. However, the investment in 5G, in data center, it's an upgrade of the infrastructure, and it will release more consumption power in China. So I think it's the best investment is in the technology. Technology is infrastructure relating to boost technology. And I think it's the right decision. And about 3 years ago, we started to invest in the 5G infrastructure related companies already. And we have already enjoyed the benefits for this stimulus plan in the infrastructure area. A couple of our companies are highly related to the 5G infrastructure investment. And we can see even in the last few quarters and even months, the orders coming from the 3 telecom carrier have been increased significantly.
It's very interesting in looking at the global financial rescue methodology. We have debated a lot about the governance issues in resolving the COVID-19 crisis. But now, in terms of financial rescue, the U.S. just tabled this stimulus plan where they're going to give every citizen $1,000 a pop, say, for example. But China is not giving money to the citizens; rather, we're investing into the future. But that's very interesting in how countries perceive different ways of rescuing the economy. And you are saying that what China is doing essentially will give China a completely competitive edge going into the next decade.
I cannot comment which solution is better. Is you give cash to every individual and let them to go through this very difficult time and spend more, or at least to not spend less. While in China is offer you better products, let's put that way, 5G and 5G related, they will offer you more products. And take the stimulus plan, a lot of $1 trillion into a new infrastructure. I think it's more visionary to tolerate some short-term pain, but to invest for future. While I think in other countries, because I think the democratic election system, you need to please your voters as quickly as possible. Otherwise, you may be out of your government. You will lose your administration. You will lose your presidency. So I think that's a choice. You need to have a short-term solution, which is very visible to every citizen, every individual. While in China, enable people to do more long-term things. You don't have a pressure from every individual people. Of course, China is also giving cash to some really, really poor families. Really, really poor families. That's also happening. And this year, Chinese government want to get rid of the people in deep poverty. And this is last year, it's a 5-year plan. This year probably have about 10, 20 million people left in China. Then we can claim this is a country without the people with the most serious poverty people in the world. Get rid of. It's a real job, and it's really happening. So it's different.
Lots of policies are happening in concurrence. Very exciting times for us, for sure. Thank you so much, David, for your time, and we look forward to many Alibabas that you managed to bring to the world stage.
Thank you.